And good afternoon, everyone. Thank you so much for making our way to our webinar today. My name is Jeffrey Tesh. I'm CEO of RCN Capital. And today's webinar is really going to cover how we're fueling the nation's top investment class in today's marketplace. The single-family rental marketplace across the United States is just absolutely exploding. And we've partnered up with a fantastic company based out of Arizona. And we have Michael Finch on board today to talk a little bit about how SFRhub is getting folks across the United States investment community the products they need to build out their portfolio. So, Michael, welcome aboard. How are you?
I am doing well, Jeff. Thank you very much. Appreciate everybody's time here today.
Yeah, my pleasure. We've really gotten to know you and gotten to know your company. And RCN is always looking for companies such as yourself to partner up with. And boy, you guys are just exploding in volume as well. Michael, maybe you could start a little bit about yourself and how you got into SFRhub and talk about the company in general.
Yeah, I would love to. And thank you for the introduction. Hi, everybody. A little bit of background on myself. Been in the commercial brokerage industry for, going on 17 years now. Very extensive background in land and multifamily. I've worked with most of the institutional players in Arizona and the Southwest, all getting into the SFR world. It was probably 2014 that my partner Jeff Klein and I sort of stumbled on our first single-family portfolio. Almost didn't know what to do with it, and ended up, taking a look at it, doing some underwriting, wrapping our arms around it, and thought we could sell it. And I think in early 2015 we did, and that's when we kind of realized. It was about 50 some odd homes, about $8 million package. It was a nice little deal. We made a nice little commission on it, and we were looking at the space and said, God, it doesn't seem like there's any institutional brokerages focusing on this space. It was like you all know, especially back in 2014 and 15, it was, the REITs were just establishing the institutional quality from an operation standpoint. And we said, hey, I think we can do something here, and we kind of shifted all of our attention to single family portfolios at that time from a brokerage standpoint. Kind of dropped all the focus on multifamily and land that we were involved in, and really made an effort to move to the SFR world. And at that point, we started refining our processes and building a team, and started shopping around to see, where we should be. At the time, we were at a wealth development company, building their brokerage, and we knew we were gaining notoriety in 2015 and 2016 for how we underwrite, how we package these investment portfolios together, and we knew we needed a national platform, and that's when we approached SVN. Which, for some of you may remember it as Sperry Van Ness, but, shorten the acronym to SVN. And we were able to negotiate a franchise with SVN Corporate. And that's when we started SVN SFRhub Advisors. And I believe that started in early 2016. So we were really excited to get started, with SVN and have that national platform. That's so necessary in a institutional, commercial real estate world. And at the time, we were the only commercial brokerage in it, and I still think today we are the only commercial brokerage that's fully focused 100% on the single-family investment asset class, which includes build for rent, new construction, rental homes. So in 2017, once we had our SVN franchise, and SVN is the 6th largest commercial brokerage in the world, all offices are independently owned and operated. We had successfully negotiated with corporate and are the only office in their franchise history that was given the entire United States as our primary market. Very fortunate to have that opportunity, and that's largely because we didn't compete with other offices, around the country that do, more traditional commercial real estate asset classes, like multifamily, retail, office, industrial, hospitality, so on and so forth. So, we operate in all 50 states through SVN, SFRhub Advisors, and we've been building the platform, ever since we acquired the SVN franchise. Now, simultaneously, and bear with me, I'll try to keep this as short as possible on the companies that we operate under the SFRhub umbrella, but simultaneously, in 2016, we started raising capital to build a technology platform around what we were doing, because our underwriting, from a man-woman hour standpoint, was very labor intensive to do it manually. And just like all the other big REITs and groups, you got to start utilizing technology. And we were very fortunate to partner with a gentleman named Dale Jensen at SFRhub.com to help us, build the tech platform. Dale's got a storied career in tech, a storied career in general. Anybody can Google his name and see the numerous accomplishments and companies he's been involved in over the years. But we partnered with him in 2016, raised millions of dollars to build the SFRhub.com platform, and that is a data valuation and digital technology platform for transacting single-family investment portfolios online. So, first and foremost, it's very data intensive. Whenever we're looking at a portfolio, we're pulling in multiple data points, cleaning and verifying, what that house is at, 1234 Main Street prior to running any values on it. We've spent a lot of time over the years helping other groups clean up their portfolios, understand what they're looking at, helping buyers clean and verify the data, before we run through our valuation processes, which we use some of the top AVMs in the country. But they're always more accurate because we're actually verifying what that home is before we run it through, which I don't think there's a lot of groups out there doing that today. And we had refined that process manually, and then Dale Jensen, our tech partner, helped automate all that. So now we can, run 1,000 homes, through our system in pretty short order, where, that would have taken us, 2 months to manually underwrite all those things. So SFRhub.com, our technology platform, powers our brokerage. And fast forward to, I think it was December of 2018 when we officially launched SFRhub.com at the IMN conference, and since then we've just been enhancing it and coming to today. 2 of the 5 companies that we operate, which is SFRhub.com and SVN, SFRhub Advisors, we at any given time have plus minus $1 billion worth of inventory on our site, and we've been very fortunate to grow a great team here that's headquartered in Phoenix, and we've been off to the races ever since, and we've got multiple transactions going right now, both in the single family existing portfolio space as well as the new construction build for rent space. So I can get into more detail on some of our companies and what we do, but that's about as quick of a kind of a background on how we got to where we are today for right now. So I hope that helps, Jeff.
Yeah, absolutely, Michael. And congratulations. What you and Jeff have been able to accomplish in such a short period of time is really impressive. And also having the vision to be able to anticipate what was coming down the road from a single family aggregation standpoint. It's funny, listening to you tell the story of how you built, SVN SFRhub, it made me think back to when, we started RCN Capital back in 2010. And, at the time, our play was strictly providing capital to investors who were attempting to take advantage of foreclosures and short sales because of, the calamity of the housing meltdown at that time. And, our whole goal was to take a product that had always been in the shadows, which is asset-based lending, and professionalize it, right? and professionalizing a product. That was our goal, taking that asset-based loan and elevating it to a commercial loan status is really what we focused on from the very beginning. And I think back to it, and I think how much times have changed, but they at the end of the day, they've really stayed the same, right? At the end of the day, your company and my company, we're just providing a service to investors across the United States on how to help them build their portfolio. In the beginning, we were strictly focused on that short-term debt, revolving buy, fix, sell. And then as time went on, certainly by 2017, the portfolio requests began to come in, and the single asset requests came in for aggregating homes for rent. And then from there, we morphed into what RCN is today, which is one of the largest single family rental lenders in the country. And at the end of the day, very similar to your story, focused on the investor, focused how the investor is going to win. And that's what I'm really excited about this call today. Because at the end of the day, the investors on this call really just want to learn, one, how can I find more assets? And two, how can I finance them? And the front end of that question is truly an interesting question today. With the state of the United home market, we are seeing such aggregation in all geographic regions across the United States. Maybe you could talk a little bit about how SVN SFRhub is kind of fitting into that marketplace today. You mentioned the $1 billion in inventory. Maybe you could talk to our listeners today about where these assets are coming from, how long they stay on your platform, and how the investors can really engage with you to be able to help build out their portfolios.
Yeah, absolutely, and it's a great question. I mean, the assets are coming, from all different sources. Just for example, today, this morning, I spoke to a gentleman. He is buying a number, about 200 homes, all sub-performing notes, and he reached out to us because he's planning on foreclosing on about 80% of them, and he wants to understand the collateral, behind those notes. And so we're going to help him, through the data and asset auditing process and valuation process and income approach, doing what we do at SFRhub.com. And then he's going to, do what he does, and then he's going to list them with us, once they're REO. So going to be a good opportunity to market a couple hundred homes in the Midwest in that example. We leverage our SVN agents all over the country. There's about 2,000 of them, that all work with high net worth investors. And getting back to what I mentioned earlier, a number, there were no commercial agents, and there really are very few today that are playing in the space, but we can leverage, our SVN agents around the country and, get them educated on the space and say, hey, when you're talking to your multifamily guys, or you're talking to your retail or office guys, these are investors that probably own single family rental homes as well. You just would never ask the question because you're focused on multifamily. Well, now you have a team within SVN that can assist. So we've turned up a number of opportunities, through getting other agents educated on the space, so we can get those portfolios listed, on our site. And then same with builder relationships. We've historically, just from older careers, and through SVN have long standing relationships with developers and builders around the country, which is another reason we're as successful as we are in leading the charge in the build for rent space. So, we're in, from an existing portfolio standpoint, we've got assets, that are listed today, that are in underwriting, that, we know are forthcoming. Maybe the operator needs to season it a little bit, but we've got a pipeline of inventory coming in, 35 plus states right now, and even, starting to see some stuff pop up in the Northeast. Was just on a phone with a guy the other day that's got about 50 properties that he's going to want to market up in, in New York. So we've done a good job, and our marketing team here at SFRhub has done a phenomenal job of getting who we are and what we do out to the marketplace. So we've become the leaders in the space, and we're fortunate that we're a trusted source to work with sellers and buyers of single family portfolios.
Yeah, no, that makes a ton of sense. And, you mentioned technology, and certainly the amount of effort that you've put into SFRhub.com is truly impressive. And, to me, this is what separates you from many of the other players, extremely qualified players in the space.
Yeah,
But, maybe you could just talk a little bit about how that technology, from a customer service standpoint, right? Like most of the folks on our call today are investors, and they want to understand how your technology is going to assist them in not only vetting the portfolio, but maybe when it comes time to sell the same way. How will it help them? Maybe you could talk about that a little bit, Michael.
Yeah, absolutely. So, I guess here's one example, and this was a gentleman who came to us, who we weren't representing the seller, but he was working with the seller on 240 homes in the sort of mid-Atlantic market, and he couldn't find a good way to qualify what he was looking at. He couldn't find good data. They were mixed around in dense urban areas. Some of them had never even been in the MLS. There just wasn't a lot out there. So he engaged us to help him, utilize SFRhub.com and our data and asset auditing techniques and underwriting techniques to really help him wrap his arms around what it was that he was looking at. And it was an extent, 240 plus properties. We went in and we were pulling data from every source we can find. And what we've done in the background is create an AI that, as we're pulling in all the data in a particular marketplace that we're accessing, we are throwing up red flags on any discrepancies. So, if everything was clean across the board on that particular house within, that larger portfolio, we feel pretty confident that we've got a clean data file. But if, one data source, just a very basic example, would red flag, say four data sources say it's a 3-bedroom and one says it's a 4. Well, that's a red flag. Why is that data source saying it's a 4? So then we've got our human capital that digs in further, all professionally licensed real estate agents that have been in real estate for many years, and they're going to dig in and they're going to verify that. And they're going to be looking, at county records and title and, contacting, the seller, or, looking to see if, there's been, any inspections or any, plans, still at the city level, that we can verify any of this stuff. So we dig in pretty thoroughly once those red flags are acknowledged, and then from that point, we're verifying the data from there, and then we run it through our AVM models once we understand what we're looking at. And so for that particular case in point, we had the current rents that those buildings were getting, or homes were getting, I should say. And we had a lot of the the info from the seller that was given to the buyer. But then we did our valuations, we did our rent projections. We put together an entire, what we call our advanced SFR scrub report, and it's a very detailed spreadsheet. That if you printed it out, it's multiple feet long, but it contained everything that the buyer needed. And we did that as a fee consulting service, and we valued that portfolio at about 24 million. He ended up getting it under contract, I think, at like 23 and some change. So that's a service that we can provide, and we do that from a fee standpoint. And we've done that for family office, private equity groups, some of the operators in the space that just need third-party reporting, annual third-party reporting. So that was just something we did for a buyer, and he has since closed on that portfolio. We didn't represent him from a brokerage transaction, but I suspect that when he's ready to sell, we certainly will, because he was very pleased with our service. But we go through that same exact process when we are onboarding a portfolio from a seller that wants to sell. So we work hand in hand with him to clean and verify what he has. A lot of times we find a number of discrepancies where they just didn't realize that the square footage was off, or that there wasn't a permit on the garage that was turned into a fourth bedroom when they bought it from whoever they bought it from years ago. And so little things like that we're cleaning and verifying to make sure that we've got a sellable deal, as well as putting together a full operating expense budget based on their current numbers, and assisting them, and even finding some efficiencies in their operating expenses if we can, which we often do. But then we also build the pro forma and the income approach moving forward based on where we know somebody can operate, especially an operator that's building scale. So we put both those sides together for the on behalf of the seller for the buyer. And then once we get the listing, we market it through all the typical commercial real estate channels, but we also drive everything back to SFRhub.com, and that's where buyers and your clients that are on this line can register at SFRhub.com. They can look at the portfolios, they can see the data, they can download and request the data tapes from us. They can use our financial modeling tools to start creating their own operating expenses based on how they operate, and they can aggregate portfolios that meet their needs. So sometimes, and we typically encourage our sellers to allow for cherry picking, quote unquote, and that doesn't mean that somebody's just going to take the best homes of the bunch, because some buyers don't want the Class A homes. They might want the Class C homes in that portfolio, or the B class homes or whatever. So it allows the buyers to aggregate portfolios that really meet their needs. Maybe they're looking at a seller's portfolio that's 100 homes, and 25 of them fit in with what they typically buy. We typically encourage the sellers to allow that, because a buyer that's going to buy exactly what fits their criteria is more likely to make a better offer than having to buy a bunch of homes they don't want and then take on the cost of disposing those homes, or figuring out what to do with them, because they don't fit into the buyer's buy box. So we really try to help buyers find what it is they're looking for, and give them the tools on SFRhub.com to cherry pick portfolios and aggregate and scale where they're looking. And if we don't have a portfolio in areas where they're looking today, the odds are we will fairly soon. So then we just make sure we know that buyer's criteria, and when we get something and we say, hey, we've got something forthcoming, keep your eyes out, we're going to be bringing this to market here soon, and hope to get them kind of educated a little bit beforehand on the portfolio to give them a leg up.
Sure. And, sort of dovetailing off of that, we have a wide range of investors on the call today. So we have investors that maybe own 10 or 20 homes that are looking to scale up. We have other investors who own, several hundred homes looking to scale up from there. One of the things that has really impressed me about SVN SFRhub is your wide range of portfolios, not only from a geographic standpoint, but also from a price standpoint and the size of your portfolios. It really varies, and I think it really plays well to the RCN sort of customer base, where we're kind of all over the map with investors at different stages of their career. Michael, maybe you could talk a little bit about maybe the average size of your portfolio, and how that plays out from a geographic standpoint across the U.S.
Sure. It's if we're talking about existing homes, I'd say our average size is probably closer to plus minus 50. If we include our build for rent side of our company, which is usually subdivisions of 150 homes plus minus, we're probably closer to averaging about 80 85 homes a portfolio. But as I said, on the existing side, for those looking for, existing scattered home portfolios, um, allowing that cherry picking really helps them, kind of, you know, make sure they're modeling the homes that they want to buy, and they can pull those homes, aside within SFRhub.com and say, there's 15 homes that look good to them. They can pull those out, put them in a model, and start adjusting numbers through there, so they can make a good investment decision, on those homes. But what we also share those tools, via email with them as well, if they don't like doing everything online and would, rather just play, on their own desktop, so to speak. Um, but we've got, again, through utilizing, the SVN agents around the country, and our marketing team doing a great job of pulling together and utilizing partnerships such as yourself. We're turning up deals all the time. So, we may have one under contract in Kansas City today and don't have anything behind that, but in a few weeks we'll be underwriting another deal in Kansas City. So there aren't many markets, secondary, or primary and secondary, that we aren't in. Some of the tertiary markets that I really like, I hope to get more scale there. I'm a big fan of the Midwest. Lots of rental homes there. We're starting to pick up some steam in the Chicago market, and like the Des Moines, Iowa market, maybe even the Quad Cities, Memphis, St. Louis. So, but we're all over the Sun Belt, and lots of opportunity for just about anybody. And we really have a varied, to your point, not just do we have sizable portfolios, but we've got portfolios that range from A class to D class, and there's it's real estate, so there's always something for everybody. We've got a 290 home portfolio in Lima, Ohio, which probably very few are aware of geographically, but it's in between Dayton and Toledo, and it's they're lower price homes. It's hard to get. Well, it's not financeable today, but great returns. I mean, we're talking 10% plus cap rate, and it's in escrow at a price right now, and the buyer is working through the inspections, and so we've got everything from as I said, C, D class homes all the way up to brand new A plus class homes, and everything in between. So it's exciting to work in this market, especially coming from a multifamily background. It's very similar in that there's a dog for every bone, and some people like to get their hands dirty and work harder, and they're working harder on those kind of lower class homes because they have higher returns, and you're gonna not have the higher returns on the class A, but you're gonna have less capex. So it's we've got something for anybody, and it's fun to work with the variety of different buyers and sellers that are out there.
Yeah, no, and I think that's a good point. Now that we're starting to talk a little bit about geography, and certainly, what we've been seeing from the lender standpoint is we've been seeing, a lot of coastal money, California, West Coast, and East Coast, New York, and kind of work your way down. A lot of that, the coastal investors that we've worked with for years have kind of run out of steam in their neck of the woods, and have really started to look at some of these. And this is a new trend. This isn't a COVID trend. This is a trend that's been going on now for a couple of years. Yeah. But it's picking up steam even more today. And then we're seeing, well-heeled investors from both coasts looking for opportunities, and it can be primary Midwest markets as well as secondary and tertiary. Certainly, you threw out some cities there. I would throw out some cities such as Columbus, Ohio, which just tremendous growth in single family home aggregation, as well as appreciation, I might add. It's not just folks being happy with the values they're buying at today, but these homes are still appreciating without a great deal of CapEx, which really bodes well for the investor who's looking for a remote opportunity. Maybe you could just throw in a little bit about, kind of what your investors typically look like, and are they looking close to home? Are they looking far away? What are you seeing at SFRhub?
Yeah, and it's really, it's all over the board. I mean, I think, if you looked back to, 20, 30 years ago, prior to the advent of what's happening in technology, I think the standard investor, 70, 80% of the time typically invested within a 10 to 20 mile radius of where they lived. That simply isn't happening anymore. It's completely changed. So we've got, one of the first deals we did on SFRhub.com when we first launched was a very small deal in Milton, Florida. It was 17 homes, a challenging deal. Majority of the homes were HUD homes, and I didn't even know Milton, Florida existed at the time.
Yeah, you got me on Milton. I'm not sure where that one is.
It's near the Panhandle.
Okay.
And the good story, by utilizing SVN, one of the SVN agents in the country had a buyer out of Washington that he knew liked single family homes, and he introduced that buyer to us, and that gentleman happened to be from Washington, and he ended up closing on a portfolio of 17 homes in Milton, Florida, and he's since closed in Chicago and since closed and is now in escrow in Montgomery. And we see a lot of activity like that. And one of the reasons that we're helping facilitate those types of deals, and of course, people are investing locally, and a lot of investors still try to keep a closer geographic, to where they live from an operating standpoint. But with where technology is today, and with what we've done here at SFRhub Advisors, and aligning ourselves with groups like you, Jeff, but also we have alliance members that are in general contracting, property management, master policy insurance providers. So when there is a gentleman that says, hey, I don't have any properties in this market, but I really like this deal, and I'm interested in looking at this. Well, what else can you guys help me with? We say, great. Well, here's a list of property managers that are alliance members of ours that are in this market. Here's a couple general contractors that we know that are in this market. Here's a master policy insurance provider, that will help you, save some costs in your insurance. And, so we can essentially deliver them a team, if they decide to move forward and close on it, that will help them in their operating. So utilizing a lot of our support services, same as debt, for instance, it just gives investors a great opportunity to kind of get out of their backyard, so to speak, and go after investment opportunities that make better financial sense, and still know that they've got quality property managers that they can trust, quality general contractors. So when they're doing a unit turn, they know they got a good group, and we can introduce those in most markets around the country. And if we don't have those in some of these tertiary markets, and again, we get to leverage SVN and say, hey, Mobile, who's we'll call the multifamily guy and find out who some good contractors are in that area. And typically in tertiary markets, a good contractor does, they work on everything. So we can make sure that we're always introducing, the right parties to the buyer that wants to figure out how to make a deal work. And then,
yeah, that's a great point. Without a doubt, that added value that you're able to provide it's huge, because these investors, and we see it all the time, Michael, sometimes they're coming into a market green, and the introductions that their vendors, whether it be yourself, providing, some sort of a contractor, oftentimes, as a lender, we're often asked for, who do we use for local inspections? What do we do for, remote rent collection. I mean, there's any number of services
Yeah,
that a strong partner can typically help with.
exactly. Yeah, it's
Yeah.
important. You have to have it. I mean, you can't do a deal without it. So, if we can help streamline that and make it more efficient, so the buyer isn't googling every support service that they need and trying to figure out who the best is and calling references, and they can just say, hey, SFRhub, do you trust these guys? Well, absolutely. We've referred them dozens of times. They do great work. So it's important to be able to get that out to the buyers that need it.
So, sort of, once again, playing off that idea of relationships and things like that, one of the things that we've seen with very sophisticated investors is them having to make difficult choices about how they're going to allocate their dollars. And, especially with your multifamily background, Michael, maybe you could talk for just a minute about the comparisons between not only just the cash on cash return from a single family investment or versus a multi, but maybe the overall 30,000 foot view on how the investor really gets comfortable with building out a single family portfolio versus a multifamily.
Sure. And it's been fun because years ago when we were in this space, multifamily guys, you would just say, hey, it doesn't make any sense, to be looking at this, like, they're scattered, it's going to cost more, this and that. But that has already been proven, by the REITs in the space to not be the case. You just gotta have scale, and you gotta know what you're doing, and professionally manage it. But from my background, and Jeff Klein's, and a lot of the other guys here under the SFRhub umbrella, and gals, I should say, I mean, it's been so fun, learning, from the very get-go, learning about the SFR world, and certainly the build to rent world. But it's not that complicated, and it's not more of a struggle just because the homes are scattered out. I mean, this is, and I hate to, it's unfortunate what's happened with COVID, but it has 100% proved everything that we've been preaching for 5-6 years, everything that all the SFR investors of the last 40 years have already known, and the same thing that all the big institutional guys are saying. This is the safest and most risk mitigated asset class in the country, and it has proven itself again, compared to multifamily, office, retail, hospitality, those for sure. Industrial is doing very well in certain markets, and shopping centers struggling, of course. So collections across the board have been phenomenal in single family, and you can't say that in any other asset class. I think multifamily is performing better than they potentially expected, but they're still not at the level of 98-99% rent collections that SFRs are at. And I mean, it's not even comparable. And when you can start getting your operating efficiencies down, and like we had mentioned, making sure that they're introduced to the right crews. If homes are scattered around Dallas or Phoenix or Atlanta or Memphis or wherever, you can operate them just as or more efficiently than you can 200 units in one location. And for a number of reasons, the operating expenses are less than multifamily. As a landlord, in a multifamily building, you've got high utility costs. You've got covered parking, you've got exterior lighting, you're paying the water, the sewer, the trash. There's a lot of things that get covered under the in the single family world that the tenants are paying for. So you're driving some of those operating costs down, and you also have a much stickier tenant, where those tenants, and I'm preaching to the choir to all the SFR investors on the line here, but these people stay for 3, 4, 5+ years. where, you know, in multifamily, you're constantly turning those units. So there's a number, and you know, and I'm not even talking about build for rent, which is just off the charts from an operating efficiency standpoint. So it's a phenomenal, stable, risk mitigated, does good in good times, does better in bad times, so to speak, you know, from a rental demand standpoint. So, you know, I have just thoroughly enjoyed getting familiar with this space, you know, from the inception. And I can tell you, I didn't believe it at first either, because I was a multifamily guy, and I just kept seeing the numbers, and I was like, this is a better margin. This is a better cash on cash. You know, these are better returns, and there's less risk. So it just, I mean, I can't speak highly enough of the space, and obviously everybody that's on the line believes everything I'm saying, or you probably wouldn't be here listening. But hopefully there are some that are thinking about getting into it. But it's a phenomenal asset class, and it's the reason.
Yeah, no question.
You know?
Yeah, I'm sorry. Yeah, it was a bit of a softball question, but you know, at the end of the day, it's really important that the investors on the line today, and you know, I'm sure we have a fair number of investors that are on the line that are thinking about aggregating single family homes and haven't quite started getting there yet. But it's really important for them to understand, you know, what the experts in the marketplace are seeing. And you know, with your background in multifamily, it really transitions well for folks to understand just how how it works. Now, build to rent. We really haven't gotten into that yet today, but I'd like to. And certainly, we're seeing a build to rent model across certainly the southern United States really gathering steam. Maybe you could talk a little bit about the high level view, what you're seeing, and also what you're seeing from an SFR perspective at your company.
Yeah. Well, from a build for rent point of view, and the SFRhub.com side of things, I mean, from a data perspective, we've underwritten over 50,000 new construction build for rent homes in the last 2 years, and since COVID, we've brought in almost 15,000 homes that we've underwritten. So we've got, you know, more data and expertise in the build for rent space, you know, than.
And let me just interrupt there for a second, Michael. Maybe you could take our audience through, you know, what that underwriting looks like from your perspective. In other words, you know, 50,000, that's a massive number. So how does it sort of flow through your portal? How does that look when that build to rent opportunity comes along? If you could walk everybody through that.
Sure. So, you know, it's a lot of work. We've got a great build for rent team here that comes from an extensive, you know, development, construction, land, you know, entitlements background. So the first and foremost key to understanding build for rent is understanding what developers and builders do. And because we come from that world, you know, it was easier for us to transition into you know, underwriting build for rent. But what we never do when we're looking at build for rent is try to assume what a developer or builder's cost is, because, you know, a public builder is different from a local builder, right? And we don't get into that. But what we do work with them on is, you know, looking, okay, you got a 20-acre parcel, you know, anywhere United States, and, you know, if it's not at finished lot stage, but you think you can get, you know, 215 finished lots that are 40-foot wide lots, our build for rent team will go in and start reverse engineering, you know, what it would look like from an operational standpoint. So if we know that the home in that submarket on that site should be, say, just for flat number purposes, a $200,000 retail price, we'll start there and then work backwards and reverse engineer the unit mix, the floor plans, the elevations, and really drill down to what the best, you know, should it be 70% threes and 30% fours? Should that be flip-flopped? Should there be some fives in there? You know, it's just really understanding the submarket first and foremost, and then understanding what can be built there, and then really looking at it from, from a reverse engineered standpoint. And then once we get the developer builder comfortable with the numbers and they say, oh yeah, well, we can build a home, to that price. Does that price work for your investors? Yes or no? And that's what we've done in our underwriting is to make sure that it will pencil from a cash flow standpoint. And there's a lot that goes into it, but once we get that agreed, then it's listed on, through SVN, SFRhub Advisors, and SFRhub.com. And again, it could be, far upstream where maybe, they're just starting their acquisition, or they're just starting their A&D or their horizontal development. And, we start marketing well before homes are being delivered, but that way it gives the capital the time and the resources they need to say, okay, well, what if we put in a forward commitment to buy homes at CO? What does that look like? Or, can we still bring some equity to the table and get pregnant in the deal and then be the back buyer? There's a number of different ways to do it, but Mark Peterson, who's our national build for rent director, him and his team, they really do a wonderful job at any stage, from raw land to finished lots to homes getting ready to go vertical, to quickly assess whether or not that works for build for rent. And we've spent a lot of time consulting with public builders, regional builders, local builders around the country, to help them understand the difference of what a for sale home is compared to a for rent home. You can bring down a lot of finish levels. You don't need 9 elevations, in a community. Maybe it's just 3. So we go through a lot of cost savings, and we really help them with their budget to show a builder, hey, these line items in your budget, aren't going to exist in a build for rent community, because you don't have, model homes. You don't have longer land carry costs. You don't have the marketing and payroll overhead. You don't have to deal with 200 realtors and 6% commissions, and buyers falling out of escrow. You're dealing with one buyer, and you can build it out quickly and hold on to your subs and order materials in bulk. So there's a lot that goes into it, and it's again, getting back to your multifamily comparison question, it operates leaps and bounds better than multifamily, and then still gets all the risk mitigation and stability that the single family market provides, because it does good in good times and does good in bad times.
Are you seeing build for rent opportunities by investors being uploaded to your platform for sale, or are you doing more consulting on the front end? What's the landscape sort of look like right now?
It usually starts from a consulting standpoint, and then we're always working to get them listed, because we want to get them out to the buyers in the marketplace. We've spent, realistically, when we saw the build for rent world starting to creep around back in 2016, at the time Colony Starwood was arguably leading the charge in looking at new construction homes from the institutional standpoint. And so we jumped on that right away, recognizing that there was going to be sort of trouble with negotiating with developers and builders, for groups that didn't come from that background. So we were able to help the buyers understand, hey, this is these are developer and builder costs. These are real, and no, you can't compare it to the 1995 home that's a block away that just sold on the MLS, because we're talking about a new construction home that doesn't exist. And then you got to perform out the rents, just like you do a new construction multifamily, which we've got extensive background in under roof. So it was a natural fit for us, but it wasn't a natural fit for a lot of the buyers or the builders, because the builders too are used to building for sale. So we had to consult and get them educated, on what a build for rent home should be, which would be, from an interior finish level, much more similar to like a Class A apartment, as opposed to the for sale builder is going to put down, nice tile or wood floors and use higher end, granite or marble countertops where, you don't need to go to those high end finishes and build for rent, but you need something that looks as nice and is as durable, but you can just bring down those finish levels. So there was a lot of consulting on both sides to get to where we're at today. But we're onboarding a number of build for rent deals, and we were anticipating pre-COVID, and it actually happened, but we were anticipating 2020 to be the year of build for rent. And we had a number of deals in escrow right when COVID set in, that we had been working on all through 2019 to get to market and get buyers engaged. And then I think we had about $200 million of build for rent escrows on our brokerage side, that everything went away, unfortunately, by March 20th when the panic set in. But it's all coming back again. So next year and the end of this year is going to be an exciting time for getting some build for rent deals closed and moving forward into the future. The runway is
it certainly is an exciting time for build to rent, and without a question. Maybe you could give some advice to folks who have been aggregating single family homes, and are really, starting to feel that frustration with the difficulty in scaling their portfolio where and maybe as quickly as they would like. And they're thinking about the build to rent model and maybe dipping their toe into that. Maybe you could give some advice for investors across the United States who haven't taken that step yet.
Yeah. I mean, it's a great step. I mean, there's the challenges, for especially in the single family portfolio space, right now is that home prices are just skyrocketing, and nobody had anticipated that. So it's squeezing the yields, and especially with operators that have a smaller portfolio. A lot of them are saying, well, I got 20 homes, I can turn around and sell these on the open market right now, at prices that I wouldn't have expected 4 or 5 months ago. So that's not going to last forever, of course, but that's causing a little bit of heartache for those that are looking to scale, even though we're still continuing to onboard, tons of portfolios that are available today and will be available, in the months ahead. So I don't want to discount opportunities, but in the build for rent space, whether it's scattered lot inventory, because we work with a lot of public builders, that a buyer could say, if they're not at a level, that could take down a 200 home subdivision, but they do have the capital to buy 20 homes. Well, they can reach out to us and say, hey, are you working with any builders in Nashville or Atlanta or wherever that may be? And the answer is predominantly going to be yes. And then maybe we can just get with some of our builder clients and say, all right, well, you've got subdivisions in this part of this MSA. Are you willing to sell some homes at CO to an investor? And they usually say yes. So that's one area in build for rent where if you're already operating a scattered home portfolio in a market and you've got a few $1 million that you can place, but not 30, like an institutional group, that's a way to acquire some new construction homes, move a tenant in, not have to deal with capex for 5 some odd years. Those tenants or residents, as I like to call them, are typically they have the pride of ownership of a homeowner because they're moving into a new home, and they're moving into that build for rent home because they've got kids that go to school in the neighborhood, and they have a family, and they don't plan on moving anytime soon. They're not going to move into a 4-bedroom house and then leave at 12 months later. I mean, the cost of that it doesn't make any sense. So you've got a great sticky tenant in place, in that scenario, and it allows smaller investors to start building scale in new construction homes. Now, when we're doing a full community of homes, and I do want to just draw a line of distinction in the build for rent space. There's kind of 2 asset classes. One is what we call a horizontal apartment complex, which is smaller 600, 800, 1,000 square foot units. There might be 200 of them on one parcel of land, which we consider a horizontal apartment, as opposed to a single family subdivision, which are, fee simple lots and 3, 4, 5 bedroom homes, that are 1,500, 1,700, 2,000 square feet. There seems to be a little confusion in the market on what build for rent is. So they both work. I'm just drawing a line of distinction. But when we talk about build for rent, we're talking about true single family homes in a subdivision. And again, for all the same reasons that I just mentioned, high quality tenants, affluent tenants, families, or baby boomers that are coming down from maybe a bigger home further out in the suburbs, or they just don't want the cost of ownership. But these communities can be purchased, in tranches. So let's say it's a 100 home subdivision, and the buyer commits to a price. We strike an agreement with the builder, and the builder can deliver 10 homes a month at certificate of occupancy. And the buyer, if they need a property manager, we can introduce them. If they have them already, once they're under contract, they can start that pre-leasing, 90 days out before a home is even delivered. So once you've got certificate of occupancy on the first 10 homes with the builder, you close, you move those tenants in the following week, and then, a month later, 45 days later, you got another 10 homes, and then another 10 and another 10. So you're leasing it up as you go. So by the time 10 months later, 12 months later, you've closed on 100 homes, you've got a fully leased community. And now you're just running into operations, right? And it's just a great way to to go about acquiring new construction build for rent communities. What I think is going to start happening, even more so moving forward, now that it's catching steam, is we're going to see more builders probably taking on some of that lease up risk too, and starting to deliver homes fully leased. I think we're probably another year or two out from seeing more people get on that bandwagon. But I think the real opportunity today is to buy homes at certificate of occupancy, from a builder, that we're working with, and utilizing our services to make sure that you're underwriting it properly. I mean, we do that all on the front end anyways, but help you if you're not used to dealing with builders, help you with builder speak, developer speak, make sure you're understanding what needs to be in the contract that will satisfy and protect you as a buyer, and make the builder happy as well, and start building a portfolio build for rent that way too.
Yeah, no, that's very well said, and we're certainly seeing that at RCN. Michael, we're coming up on the top of the hour. Maybe just real quick, some closing thoughts and how folks can reach out to you and engage some of your services.
Yeah. Well, I'll apologize if I talk too much and you didn't get to all your questions, Jeff. But the easiest way to reach out to me, I mean, I'm all over the internet, so you can Google my name and my phone number will pop up. But you can reach out to anyone at SFRhub.com. You can Google us. www.sfrhub.com is the easiest way to sign up, get registered. We'll get you. Our team will get you certified, and open up access to all of our inventory. And whether or not you're looking to discuss single family existing portfolios or build for rent, we'll get you with the right parties within our organization to have those conversations. Whether you're a buyer or a seller, we can help. One quick point that I want to make: if you are a seller and you're looking to move a portfolio, and then just for whatever reason, maybe you're kind of tired of the tenants and toilets, and you want like a triple net deal, we can help you dispose of your asset and then get you introduced to the right commercial agent to find you, a Walgreens or a Chevron or whatever. We deal with a lot of, I guess, baby boomer sellers that are looking to, just kind of go off in the sunset, and they don't want to deal with 100 homes. They'd rather have one building that's a triple net. So we can always help in that regard too, given that we're a commercial brokerage. But I want to say thank you, Jeff. And I just can't be more excited to be involved in the single family investment and build for rent space. Like I said before, it's a proven asset class and has been for 50 some odd years. And it's exciting now that the institutional players and high net worth investors are paying attention to it, because it's unlimited opportunity. It's certainly the best asset class in the country, and we look forward to assisting and working with anyone and everyone that would like to utilize our services.
Well, I really appreciate it. And, Michael, at RCN, we choose our partners very carefully. We've put a lot of time and effort into building our company and protecting our cherished customers. So when we come on board and enter a relationship like this, it speaks highly of you and your company, and we're really glad that we've put this together. The information that you shared today with our customer base was timely, and it was really in depth, and I can't thank you enough for that. And I look forward to speaking with you again soon, and I look forward to speaking with all the customers on the line today. Feel free to reach out to Michael directly, and of course, if you need anything at all at RCN, info@rcncapital.com, and the partnership continues. So thank you so much, and good day, everyone. Thank you.
Thank you.